This program is brought to you by realestate.com.au, Australia's #1 address in property. With more properties for sale than anywhere else, we make it easier.
Thanks for your company here on Business Now. Let's take a look now at the auction results from over the weekend. And I've got to tell you, it still was very strong. Across the country, 1,472 auctions. You can see the national clearance rate just under 68%. In Sydney, 496 auctions. The clearance rate here just shy of 69%. In Melbourne, though, it was really strong. 571 auctions, a clearance rate of a whopping 75.7%, almost boom times. In Brisbane, 90 auctions, a clearance rate there around 55%, and Adelaide just 33 auctions, the clearance rate 63.6%, and Canberra 50 auctions. Look at this, the clearance rate 74%. So let's bring in here Eleanor, Creagh, Senior Economist at REA Group. Eleanor, thanks for your time. The Reserve Bank Governor gives testimony to Senate estimates on Wednesday this week. It's going to be interesting again ahead of an interest rate decision the following week, where you just get the feeling for how they view Australia's economy, but maybe even the strength in our property markets right now.
Certainly it will be interesting, and I think certainly interesting in terms of the language, how hawkish and dovish or dovish the governor may sound in his commentary, potentially giving us a bit of a read as to their thinking on where interest rates will be heading over the next few months. We do know that there's another, I guess, relatively big test for economic conditions and certainly housing market conditions coming up over the next few months, as a number of or a significant number of those borrowers who have really, I guess, not really felt the full impact of the tightening that's already been delivered begin to roll off those record low fixed rates onto interest rates that are much, much higher. And I think how much that will play into, I guess, what the Reserve Bank does next.
So we know, for example, that there's a lack of new housing starts out there. But what about existing properties that are likely to hit the market, apartment dwelling complexes that might have been put up over the past 18 months to 2 years when conditions were better? Is there much supply actually coming on over the course of this year?
So we certainly know that we've seen a downturn in activity with respect to approvals, and that's largely been driven by apartment approvals, with apartment approvals sitting actually around decade lows at the moment. And we have seen that as well, there is a lag coming through with respect to completions, given industry challenges, high construction costs, labour shortages and the like. And we are certainly seeing that that supply environment is coming through in home prices at the moment, with that we've seen 4 consecutive months of price rises, despite interest rates continuing to increase, with, I guess, a relatively softer flow of new listings coming to market. So it's really meaning that, I guess, conditions for sellers at the moment are relatively good, given that home prices have increased for 4 straight months. And they're really benefiting from the fact that there's less competition with other vendors. We're certainly seeing that reflected in auction clearance rates as well.
So it's interesting just to see what the dynamics going forward will be. Rising population, increased student population. We've talked about that before. Rising rents. At some point there becomes, if you like, the mechanics or the mathematics that say to a developer, right, now is the time to go and find a block of land. Now is the time to put up that block of apartments. But, you know, the question is when, always the timing with these things, isn't it?
Yeah, I mean, that is right. And certainly we know that with the population growth rebounding strongly, with our population continuing to grow over the next few years, we are going to continue to need more homes. We already have real issues or challenges in the rental market at the moment. I would say that the national rental market is in pretty dire straits. We know that there are potential renters who are facing real significant increases in rental prices. We've seen that the share of affordable rentals, which is rentals listed at less than $400 a week, in April actually hit a record low. So just 16% of all rentals listed in April were listed for less than $400 a week. Now, to give you some context, so that's a little under 1 in 6 rentals. Now, at the onset of the pandemic in March 2020, that was closer to 1 in 2 rentals. So it means that particularly lower income households will really be facing significant challenges at the moment in terms of being able to avoid spending a really large chunk of their income on rent. And it's not just those budgetary constraints that are the issues. It's the fact that properties are renting out incredibly quickly. There's a persistent undersupply of rentals available on the market at the moment. And as you say, certainly with student arrivals continuing to rebound, with net migration as well forecasted to be at around 1.5 million people over the next 5 years, certainly with that current persistent undersupply of rentals, something really has to give.
Something really has to give. I've got to say, always good to chat to you, Eleanor Creagh from REA Group. Many thanks for your time today.